When Palo Alto Networks reported back in February, the guidance was considered dismal. Stock plunged from the 360s to the 260s in a single day. But after speaking to CEO Nikesh Arora, what did I do? I told you to stick with it, maybe do some buying we did for the Chapel Trust, because the future's bright for this best-of-breed cybersecurity play. Sure enough, since then, the stock's been a juggernaut. Got this one right, closing at 343 today, and now it's rallying after hours trading. Palo Alto reported a strong top and bottom line beat with very encouraging guidance for the 2025 fiscal year, which already started. Don't take it from me. Let's check in with Nikesh Arora, the bankable chairman and CEO of Palo Alto Networks. Find out more about the quarter. Mr. Arora, welcome back to Mad Money.
Thank you for having me, Jim.
Nikesh, when you were on a couple of quarters ago, you introduced a concept called platformization. Immediately, the wags told me that was just a cover-up. He doesn't really have anything. He's just trying to snow you, Jim. In fact, don't we all wish that you had done platformization a lot earlier?
You know, Jim, I'm glad you're able to say that word without a hiccup, because we're trying to get it in everybody's lexicon. Look, this is going to be how we're going to achieve our target of getting to $15 billion as the first pure-play cybersecurity company. And I have to say, as I said, I wish I'd done it earlier. One of my not older, but one of my prior bosses said to me, I wish I had executed my good ideas faster. So I feel the same way. I wish I'd done it earlier. Really excited by the pace of platformization, excited by the conversations we're having, and excited about the deals we delivered this quarter.
Well, it seems like we had been talking about the idea that it was hard to show a return on investment on something, and particularly because, like, it's cybersecurity, you don't want to have to shut everybody down. But the fact was that you were able to demonstrate more, let's say, a better use of a company's capital with platformization than just buying one product and stringing it up with others.
Well, I think, Jim, it's funny, like, all of us have seen this happen. Like, you know, when Salesforce was born or Oracle Financials, we took a bunch of disparate systems and we put them together and called it the sales CRM platform or the supply chain platform. Now it's time for a cybersecurity platform. Now, I will tell you one thing. It doesn't matter whose platform you buy. You can't go back. You can't go back to point solutions and start stitching them. It's like a one-way street. Once you come this way, there's no going back. So our incentive is, when we have the technological advantage, the platform, we got to get ahead of this. We got to move fast. We got to get our customers onboarded with this, which allows us to win the long-term game.
Well, we also need to get the analysts on board. For instance, I remember when Mark Benioff told me, listen, from Salesforce, we're doing a platform, and basically you better understand its remaining performance obligations. That's how we're going to do it. Okay. It killed his stock, but he did not care. You have said, look, let's switch to something that makes it so it's easier to understand how well we're doing, which is remaining performance obligations. How was that for the quarter?
Well, we grew 20%, Jim. And I've been on your show the last 4 quarters and telling you that billings is a broken metric. And we went and canvassed our shareholders. We talked to people like yourself and said, look, the real representation of our business is like other platform companies have shared. It's ARR and RPO. Adobe uses that. ServiceNow uses that. Salesforce uses that. Workday uses that. It's time we stepped up and started doing that for ourselves, because we are actually now in the platform business, and that's the better metric to measure the success, both short-term and long-term, for a platform company.
Absolutely. Now, I want to talk about CrowdStrike for a second. They're a competitor. They're a good competitor, and they're someone, by the way, that you have never said a bad word to me about. You are a competitive person yourself. But the fact is, they did make a mistake. And it's a mistake that there by the grace of God. Other people could have made it. But your system, apparently, you feel has a better fail-safe mechanism, or the way you would roll out something's got more of a fail-safe?
Yes, as I've said publicly, Jim, it's unfortunate it happened to them, and I think George and his team did a phenomenal job in trying to remedy the situation, because it's important for the credibility of the cybersecurity industry that we maintain the trust, and he did. I think they could have done a better job of rolling out the changes. We do not do it the same way. We would never deploy something to tens of millions of customers in under an hour. We use a cohort of 1%, test it to make sure we have a representative sample, that if anything happens, we know what happened, so we can roll it back for those 1%, and then we do it in a phased manner. Not only that, we allow our customers to control the ability to do the phased rollout, so in case somebody has a mission-critical operation, they prefer not to do it during rush hour or busy hour, they could do it at a time when they have more downtime. So that way we're different. But other than that, I think we all deploy similar cybersecurity products.
But have you been able to... I know you're not a turkey vulture coming after a dead carrot. It's not that. But have you been able to capitalize off of it in the sense that, or has it been too soon? Maybe people are so buried they haven't been able to come in and call you and say, listen, we need your help.
Well, look, all that happened was our customers were busy remediating the problem. In fact, we had to be very creative now in making sure our deals got through, because the last 2 weeks of our quarter as well. But I think the customers appreciated that we were there to help if you wanted help. The customers would like to talk about options that Palo Alto offers in a similar category. So we're seeing more conversation with customers, but we're not chasing it in such a way that they're bad, we're good. We're saying we're also good, test it out, give us an opportunity to deliver the capability. And really coupled with our XIM capability, our XDR and XIM capability, which kind of is in the same sweet spot as CrowdStrike is, we're seeing momentum, as we showed. We've seen tremendous momentum in XIM.
Did you have yourself a chill, the idea that perhaps this is the way that a cyber terrorist get a little, didn't realize could shut down the system so quickly? I know Apple told me, look, we could have stopped it if we were the default choice. I mean, is it possible that, well, you know what, hey, they didn't get shut down. But do you think that this is a recipe for what could go wrong?
I think, Jim, what is all showing us again and again is we've been operating in a sort of a passive legacy, take your time environment, but the whole world is getting so much more interconnected. Whether you look at what happened in the healthcare industry, or look at in the car dealership industry, those are other ways that those systems got shut down because bad actors got in the middle of them. So yes, the world is telling you that you have to have more real-time security. You have to be able to find the problem, fix it in short order. That's why we say, get off the old legacy systems, get onto newer platforms, start protecting yourself in real time. So it's all sort of fitting the narrative that we want our customers to go towards. They just need to step up and do what they need to do.
All right, now, one other thing that I thought was really terrific, a $500 million share repurchase. I mean, once again, there are a lot of things that happened that you said would happen. And I wish people could, I mean, look, you don't tell me any of this information, but I wish people would understand the confidence that you inspire by going and putting money where your mouth is. $500 million is not chump change. This is something you've got to keep.
It's actually $1 billion. We're at it 500 million. We already have a $500 million.
You already have one. But what I think that people don't seem to understand is you're hoping that if they want to sell it, go ahead. If they want to sell it at $340, you'll buy it.
Well, Jim, we generated $3+ billion of free cash flow. We're basically a debt-free company that almost $7+ billion of cash on the balance sheet, and we generate $3 to $4 billion a year. So we got to start figuring out ways to provide a return to our investors in the cash, and part of that is to do some share buybacks, and part of that is to be opportunistic to see how the industry evolves. Because, as I've said, cybersecurity is the most innovative industry in the world, so you have to keep your powder dry.
Well, I also didn't even go over what you've been doing AI and not what you're doing with IBM. These are all very big initiatives that you have.
Yes, Jim. Well, on AI, we're very excited. We crossed $200 million in ARR in AI. Real AI, selling products to our customers. This is not ideas, thoughts, things we're trying. We actually sold $200 million worth of ARR into our customer base across all the stuff we do in AI. IBM, really, really excited about the deal, and really excited about what Arvind and I have been able to pull off. I think all the IBM customers are going to be delighted with our XIM product. I'm looking forward to that deal closing and converting a lot of those QRoC customers to Palo Alto.
Well, look, I'm a believer in platformization. Maybe others will join us. Since you taught me, I better learn it, and I have, and it's made our viewers a lot of money. I want to thank Nikesh Arora, Chairman and CEO of Palo Alto Networks, PANW. Thank you, Nikesh. Great to see you.
Thank you very much, Jim.
Absolutely.
Thank you.
Mad Money's back after the break.
Coming up, hit us with your best shot. An electrified fast-fire lightning round is next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.